Guys, I lost almost $10,000 in the stock market, and I invested with Robinhood, but this is kind of what it felt like. Imagine taking just a single dollar and eventually turning it into something like a 5. You'd be so happy, right? And then eventually investing that 5 and getting something like a 10. That's incredible. And then eventually taking that 10 and being able to double your money just like that. You'd be so happy, you'd say to yourself, this stock market stuff is so easy, I can do this again. So you want to get a 50, and you do. A 50-cent piece. Because the lesson here is, don't get greedy. Or is it? Hey, what's up guys? My name is Andrei Jikh, and welcome to my YouTube channel where I teach you all things finance related in all sorts of fun, wizardry ways. But in today's video, I want to show you guys exactly what it feels like to lose nearly $10,000 and why I'm actually super excited and happy about it, which makes no sense, right? Like, why would you be happy about that? Aren't you supposed to make money in the stock market, you idiot? I told you. I told this guy he's gonna lose everything, and he didn't listen to me. I'm so smart. Don't ever listen to him. The real truth of the matter is, the lesson here really isn't not to be greedy. In fact, believe it or not, it's the opposite. I want you to be greedy. I want you to be greedy when others are fearful. Can you guys guess who said that? Of course you can, because you watch all my videos, right? And you're subscribed to my channel, and you smash all those like buttons down below, right? Right? Here's the thing, as a starving YouTuber, when I make my dividend income videos, and sometimes I reach out and I answer all the questions down in the comments below, and I make my financial strategies available, and I share my stock purchases in real time and financial tips, despite doing all of that, sometimes that can attract some negative Nancys, right? And some Debbie Downers. Of course it would, because welcome to the internet, where everyone and their mom is a millionaire boy genius at the age of 12, where they work at home making $12,000 an hour. Just like, welcome to the internet.
You lost money exactly like I predicted you would.
And every time someone says that, I smile. Why?
Because they're dumb, dog.
No, I'm kidding, that's not why. It's because I genuinely feel sorry for them. I feel bad that all they know and all they've been taught is through our failing education system, through movies, TV, and bad internet ads. And what they've been taught is that in order to make money in the stock market, they have to be a day trader during the morning, and then be a short seller at night, and then trade in the Forex market with put options and calls on fleek, you know what I'm saying? Because I have no idea what I just said. I think I just used the hottest stock market trend words that are popping. How'd I do? I smile because no matter what happens, I'm still a winner. And this strategy is so brilliantly simple that literally anyone can do it, and you really can't lose. That's because I'm a dividend investor, and I invest for the long term. And in this video, I'm not gonna try to convert you into doing the same thing I'm doing by becoming a dividend investor, even though I show you every single week, step by step, how to do this. I know that not everybody wants to be paid while they sleep. I'm making this video to show you how I handle the ups and downs. I want to be transparent, and I want to be accountable for my actions despite the market's ups or downs, and despite the good or the bad. And I really wish everyone understood this simple truth, because I think everyone would be better off financially if they understood this simple concept. And the best part is that I'm gonna do it for free. I literally have no course, no email newsletter to sell you. I don't want you to sign up to anything. This knowledge is free. Sincerely, I'm so excited when I get to talk about this to all my friends. I'm that guy that watches them buy something for $100 they don't need, and I'm like, bro, why are you buying that? That's not $100. That's actually $2,500 of opportunity cost at 4%. Do you have $2,500 invested in your portfolio at 4% to buy that? I'm that guy. So first, I'll start off by saying that I found a really great video by Graham Stephan recently called How to Beat the Stock Market in 2019. It's a really good video, definitely go check it out. And in it, he shows research studies that supports that the best way to really beat the market is not by trying to time it and trying to buy it when it's low or selling when it's high, but instead keeping your head down and investing consistently over the long term. But you guys have probably already heard that one before, right? Or some version of it. Definitely go check out his video, it's really good. I've also made a similar video aptly named Stock Market Crash, Dividend Investing, but his title is way better, so definitely go check out his video. But I'll go a step further and tell you something else that most people don't talk about. You and I are human beings. What a revelation. For the most part, we as human beings don't invest 100% objectively with 100% factually correct information the way that we should. We have emotions, we have fear. And I promise you, no matter how much money you think you have or how smart you think you are, when you see your net worth in your portfolio drop by $1,000, $5,000, $10,000, $100,000, I promise you will stop and pause. You'll think to yourself, oh my gosh, am I doing the right thing? Is this really the best thing for my money? Should I have listened to that friend who just told me I should have used that money for a down payment on a rental property? Should I have bought Bitcoin? My wife's gonna kill me. And that's a natural human response. But what if I was to tell you that you could feel happy regardless of what the market does, whether it goes up or whether it goes down? What are you saying, Morpheus? That I have to sell stocks to fund my retirement? No, Neo. I'm saying that when you're ready, you won't have to. That probably made no sense to anyone, but if it did, smash the like button. Here's the thing. When most people talk about investing in the stock market, they look at it like this. Picture this. You've been investing for 40 years, you're 67 years old, you're ready to retire and watch reruns of The Golden Girls and The Nanny. Those are actually shows my mom used to make me watch, and I enjoyed them. It's embarrassing. But anyway, you are ready to retire. Now, in order to fund your retirement, you're gonna sell stocks from your $1 million portfolio, right? Now, I used to think that you'd have to just sell all of it, and boom, there you go, you're a millionaire. That's not exactly how it works. What you would do is you would fund exactly what you needed to. You would only sell what you needed to fund your lifestyle, which is usually at around 4%. So imagine this $1 million portfolio. We would sell 4% of it every single year. That would mean that we would withdraw $40,000 from that million, leaving us with $960,000. Now, the way that it works is that if we assume a standard 8 to 9% growth rate, and assuming we don't inflate our lifestyle, that remainder principal is actually going to grow faster than we're able to spend that money in retirement. So check this out. So if we multiply $1 million, actually $960,000 by 8%, we get $76,800. So that is how much the portfolio has now grown by. So let's add the principal back in, which is $960,000, and we're left with $1,036,800 after we just spent 40 grand to fund that year by withdrawing 4%. And so you can see how theoretically doing it this way, you actually never run out of money, which is nice. But that's theory, and reality doesn't always meet theory eye to eye. Imagine how many people were ready to retire during the 2008 stock market crash, right? Some of their portfolios dropped by 30% and sometimes even more. So in the example of the $1 million portfolio, that 30% drop leaves us with $700,000. And 4% of $700,000 is just $28,000, which is significantly less than the $40,000 per year to live on, right? Especially when you're 67 and you've got expensive medical bills to pay for. Imagine the kind of fear and stress and uncertainty that all these people faced when they thought that maybe they had to re-enter the job force, postponing their retirement by another 5 to 10 years. Who knows? That is scary. And here's really what helps me sleep at night in the face of this uncertainty in the future, whether this happens today, tomorrow, or in the far future. Guys, this is game-changing, but it's a little technical, so bear with me. When we invest into dividend-paying companies, their dividend yields actually adjust up and down according to fluctuating stock prices. Now, if you're not sure what a dividend yield is, go watch my recently made video about what a dividend yield is. I kind of integrated it with Robinhood, but it kind of explains it. But here we go. Let's get hypothetical for a second. Let's say that you bought McDonald's, and McDonald's is worth right now $100 per share, hypothetically speaking, and they're going to pay you 4% per year. So that's $4 off of your $100 that you're gonna get paid for just simply holding on to the stock and do nothing. That's most of my portfolio, by the way, companies like this. So now you're getting paid $4 a year. But then the next day, somebody chokes on a French fry and there's a class action lawsuit. It is the end of McDonald's, right? Everyone's screaming about it. And as a result, the stock price drops in half. So now your $100 is worth just $50. You're upset, I get it. But guess what? Your income of $4 is still going to be $4 because the dividend yield is going to adjust upwards to compensate for that. The reverse is actually also true. So let's imagine that the same company, McDonald's, partners up with Tesla to create the all-new fuel-efficient electric pimp sled made entirely from recyclable chicken nuggets. Oh my God, it's a new paradigm. The stock price doubles and now it is worth $200 per share. Well, guess what? Because the stock price doubled, the dividend yield gets cut in half. So now the dividend yield is just 2%, and 2% of $200 is still $4. Now this is all, of course, assuming that the dividend is healthy and that the fundamentals are still strong, but the original income is still intact. And so the dividend yield is actually inversely correlated with its share price. So when the stock price goes up, the dividend yield goes down. When the stock price goes down, the dividend yield goes up. Maybe you knew this, maybe you didn't, but if you ask anybody off the street what a dividend yield is, they'd be like, what? And if you ask them how does it react during market forces, huh? I promise. You're welcome. So regardless how much a stock price falls by, I still get paid and my income is largely untouched. Folks, can you imagine how sweet my dreams are and how soundly I sleep regardless of what the market is doing? I have no idea who I'm trying to imitate. That was just silly. Don't even listen to that. So yes, I'm happy when the stock market goes up because I get to look rich in front of you and YouTube, and I get to show off because look how much money I have. I'm so smart apparently, right? It looks like I know what I'm doing, except I'm missing my Ferrari. That gets that extra credibility, right? But when the market goes down, that's when I really feel happy because that's when my money gets a lot further and has much more of an impact because I get to reinvest in the same high quality companies that I'm investing in anyway, but their yields are much higher. So I'm getting a lot more bang for my buck. And even though I lost nearly $10,000 in my portfolio, on paper, my passive income is still largely the same, right? And coming from an immigrant family, I was never taught how to take big risks in my life, but being a dividend investor makes me feel like I really don't have to because I'm gonna get paid either way. And guys, I hope that you start investing today, now. Not when you think the market is at the bottom, but right now. That's when wealth is created. Because if you're not investing now, you're taking a much bigger financial risk for your future. And if you're not a dividend investor, you're taking a much bigger emotional risk as well. So don't let your fear stop you from growing your wealth and investing during what could be considered some of the best times in history to invest. And that is why today I'm happy. Let's go buy some stocks. Still not wearing pants. What up? Smash the like button, please. My life depends on it. Love you all. See you soon. Peace out.